All right, we had some interesting things to look at today. In the first 60 minutes of the market, we actually did not have our normal trade setups. I didn't take a trade because we just didn't have things come together for us. But this was a good learning topic here today. It gives us an opportunity to talk about having patience as a trader, because when you're dealing with a game of probabilities, you're going to have winning days, you're going to have losing days, and you're going to have days where you aren't able to take a trade. Having the discipline and the psychological focus to accept that you aren't going to make a trade today, it takes an objective focus. A real foundation on the trading, on successful trading, is built on risk management and managing risk, not the expectations of making money every single day. So what we're looking at here is the market opening here at 9:30, and we had quite a bit of fluctuation at first. Because of this, I wasn't sure. Our first pattern I saw was a double top here with divergence on the tricks, and I thought we'd possibly have a trade to go short here. But then it reversed and then had a setup possibly going long here, but none of this really produced a good setup. It was just preliminary stuff. And then when this kind of peaked out here, I realized that we were going to see a range of consolidation, and we kind of held on to this. As it was consolidating, it kind of produced that triangle pattern where you've got pressure from both sides building up, building up, building up to the release of the report at 10 o'clock, which then would, in theory, would cause it to break one way or the other. The trick is knowing which way it's going to break, and really I use this as just more of an observational tool versus an actual trading tool. But the report came out and the market pushed up significantly, so quickly that it didn't have enough time to actually give us a setup in this push. So what I really, most of the time we're going to have, especially in an area of resistance like this, we're going to have the market push up, consolidate, and continue. And that was where I was expecting to see our setup. It just didn't happen today, and that's okay. So we passed on trying to enter anything on this upward push, and watched it as it started moving back down, gravitating back towards or recovering from that push, and the day just kind of flattened out. That's what happened, at least until here. And so for illustration purposes, I should just mention we stopped trading here at 10:30. Other traders or members of ours will continue to trade through the day, but our trading room ends there, and traders can decide whether or not to continue. But later on in the day, we did have a setup right here. I just want to point this out. This was probably the trade of the day if you were in the market this long. I don't know what report came out here at 11:20. I actually didn't check, but I didn't have anything on my schedule before that time, and so it was just interesting to me. This is probably a trade I would have taken, not knowing that there was something happening that caused the market to move as it did. I generally don't trade on news, but what we have here is a simple setup. Our MACD crossing the long position, our SMAs, there we go. We have our first indication that we're going to look for a trade to go long. Second, we have our setup happening right here. Measure that on the tricks. We show the strength is there. That's the second key. Third, we have our entry signal. We've got the tricks showing a change in momentum. We take an entry here going long, and this would have been a very nice trade to be in later today if you were there. But like I said, I was done trading myself. Now the thing that I wanted to bring out about this is you're not always going to have those 1 to 2 to 3 opportunities to make a trade in the first 60 minutes of the market. It's not going to be there all the time. The 2-minute chart has been the chart of my preference because it's a short enough time frame that it provides enough opportunities for me to be satisfied in 60 minutes of trading. But it's also long enough that it filters out a lot of the market noise that you'll get on the tick chart and 1-minute chart. So it's a good chart. But if you trade multiple time frames, if you're trading 1 minute, you'll have opportunities that you don't find on a 2 minute. If you're trading a tick chart, same thing. If you're trading a 5 minute, you'll see longer trend pushes that you won't necessarily be able to identify as well on a 2 minute. So there's a way to be able to expand or increase the opportunities that come to you in the time frame that you're trading by using multiple time frames. But you have to also understand that in a game of probabilities, you're not always going to have it happen for you, and to be able to accept that and walk away and come back tomorrow, it is something that every trader needs to learn, because it's important. I get a lot of people coming in who have built up expectations that they're going to make money every day. So in a day like today, they start forcing trades that aren't really there, just to have the thrill of making a trade. That is the danger that you run into when you start letting your emotions play into the mix of making your decisions here in the market. So remember, remain objective. This has to be approached with an objective mindset on good risk management. All right, if you have any questions, let me know. I'll be happy to help, and we'll see you in the trading room tomorrow.